Hey everybody, Mitch Wilder here with the Ahead of the Curve podcast with Micah Frame back with me, of course. And so today we know that for people who filed extensions, right, that season of filing those taxes is coming upon us. For everybody who already handled it, but they're going to be starting to think about it again at the end of the year, we got to have the question answered. One, Micah, what I was thinking is we don't want tax season to be a mysterious time of magic,
Right.
right?
Yeah.
Because it doesn't have to be. But,
No.
the question always comes up, right? Each year. What does my CPA need, right? If people are working with Micah, what does Micah and his team need in order to file my taxes, right? So let's get into that. Like, at the crux of it, at the basics, right? What are the list of things that people need? And then we'll kind of get into other situations of what people should consider.
Yeah. So this is one of the questions that we'll understand the first year or two someone's working with us. It'll start to confound us with some client. We'll have clients for a decade who will ask every year, well, what do you need from me? And we're obviously going to go deeper into this, but
Sure.
basically the first answer is what the same stuff you sent us last year, unless something has changed. So look at what you sent us last year. And if for whatever reason somebody doesn't have that available or they don't remember or whatever, the next easiest thing is to look at your tax return, because that's going to give you not only an indication of the activities you had and the different things you would have had to provide to produce that, but it'll also in some instances give you the general format that we might be looking for. If you're self-employed and you have a Schedule C, you're going to see, okay, well, this is how my business income and loss was presented and categorized, so I probably need to get them in a somewhat similar format. But
Right.
really, that's where you start. Look at what you sent us last go around. Look at what your tax return was last year, and then of course, if you've had major life changes from then, we need to adjust that as well. But that's where you
The,
start.
yeah. Well, and I mean, my saving grace that I love that you guys do. I think Laura still does it. I got one last year.
Yeah,
Is tax season rolls around. These are the basic documents that we need, and Laura sends that beautiful list. And to me, that
yeah,
list is starts my year off as gospel. I'm like,
right.
I got to have at least these things. And I know I know you guys do that for everybody, and you do that for a reason, right? Because those are the most common documents
Yeah,
that are needed. So just in a basic setting, like, just what are the basic documents on that list that most
yeah.
people need?
So most people, unless you're just most people are going to have some kind of W-2. If even if you're if you're have a business, a lot of times you'll be an S corp, so you're paying yourself. You've got W-2. You'll have 1099s from interest income. If you've got any sort of brokerage account or investments, you'll have 1099s for
And
dividends and your
all of those are
trading.
going to generate that for you, right? Like all of those investment platforms, they're going
Yeah,
to have a spot for tax documents.
yeah. Just hand
Even
them
ones
to
like
they'll have.
Robinhood. Yeah.
Yeah, they'll send it to you. Just remember to download it.
Yep.
If you itemize your deductions, which I think we did a video on that last week with some of the most common ones, but if you've got mortgage interest, the 1098 form will have your mortgage interest, real estate taxes. If you've got PMI, if you donated to charity, that stuff will pop up. If you have a rental, if we already have the rental and it's from past years, all we need is the activity for the current year. So it's basically it goes on what's called a Schedule E, and again, you can reference that on last year's return to see what all the line item expenses were. But it'll be, okay, what was your rental income? What did you pay for insurance? What did you pay for repairs? What did you pay for all these different things? If it's a new rental, we'll usually need the closing documents as well, because then we've got to pull that to start depreciating the property. So you start with that. If you have a business, at a minimum, well, if you have a business, usually the easiest thing to do is just give us a copy of your QuickBooks file, or access to your QuickBooks Online, or whatever cloud-based
Whatever you're
accounting software
using.
you need.
Hmm.
That makes it a lot easier, because then any reports we need, we can drill down and pull the information. Versus if you just send us, at a minimum, we need a profit and loss statement. and you usually want the balance sheet too, just to make sure there's not assets that were purchased. But if you just send us the reports, there's nothing wrong with that. But there could be things that look a little wonky. There could be, we need to drill down to get a little more information. And then every single time you're having to send us a new report, or at least clarifying what's going on. So the
Right.
easiest thing, if possible, is just to give us the entire file, and then we can pull every single report that we would need from it.
Well, and like it seems like it was either last year or the year before. Like I think you guys have got access. Like for me, for example, like you've got access to our Gusto
Mm-hmm.
payroll documents. You got access. Like I use Wave, right? So you got access to
Yeah.
Wave. You got access to all the stuff. There's like I'm responsible for compiling the things that you need and giving you the information that
Right.
you need, which you guys put together the list, and then where we get into things that are outside of what's normal, right? We're getting into like you said, life events, right? Life changes.
Right.
So you think a lot of people think, well, this is it's funny because it's the some of the things that have the biggest impact on their life, and they
Yeah.
forget to mention it to their CPA. And it's kind of crazy. So let's talk about some of those things that are outside of the basic documents, right? Like your W-2s, your P&Ls, your balance sheets, right? Any information about rental
Yeah.
properties or investments, and 1099s. So those are the core documents, right, that we talked about.
Yeah. For most
What
people, yeah.
Yeah, for most people. So what are the life events that somebody should be making their CPA aware of if they don't ask, if the CPA is not asking?
There are two that we're not going to always aren't going to pick up on automatically that happen quite a lot. One will be if you have a new kid. I
Yep.
guess as a sort of subcategory
You guys
possibility.
don't you
So
guys don't get
if
the birth announcements?
no, we don't get the birth announcements. Sometimes people get married or divorced and won't tell us that immediately that we need to know. And also, along with and selling your house was the other one. There's other things I was going to trail into, but we people will kind of pick up on the fact that they sold the house because on different documents there can sometimes be a new address. Depending
Yep.
on when they sold the house though, and if they updated the information, that old address can still pop up a lot. So we have to be have some indication. But if you've owned your house for and lived in it for 2 out of the last 5 years as your primary residence, you get to exclude up to, if you're single, a $250,000 gain, if you're married, a $500,000 gain. So for the vast majority of people, there's not actually an income tax that generates from that event, but we still have to report it on the return because the IRS is still having 1099 S's usually that are generated showing that that property was sold, and they don't
Right.
automatically
Just
trigger the fact that
documenting the transaction, basically.
documenting the transaction, because otherwise they're going to see there's a sale and there's a good possibility that you're going to get a nastygram from them saying, hey, we show that you sold a property for $300,000, and they don't account for the fact that it's your primary residence, and they don't know what your cost basis was for it. They don't know what you paid and what you did in renovations. So we report it on there. We report it the same as you would any other capital sale on a Schedule D, but there's an exclusion for the fact that you don't actually have to pay income tax so long as you didn't have over a, if you're married, a $500,000 gain, in which case, if you did, you get to exclude the first $500,000. So it's
That was going
only
to be
the
my
amount
next
over that
question.
you have to pay. And if you had that much of a gain, we should all be so lucky as to have that much of a profit on our house sale.
It makes just as a side point to that. That I don't know if anybody remembers this, but years and years ago, Oprah was sued for like $1 billion. Do you remember that?
I
Oprah got
don't
sued
remember
for
that.
it was like a crazy, and and
What for? What was the?
I don't even remember what it was for. Like, I mean, I feel like it was something having to do with her show. I'm gonna have to look it up because
Yeah.
it was fascinating. But yeah, it was like this crazy lawsuit. I want to say like $1 billion. And the point was that when people were asking her about it, like the reporters and everything are asking her about it, and her response was amazing. She was like, it was something to the effect of, I'm happy that I'm the kind of person that is in a position to be sued for $1 billion.
Right. Fair enough.
Just
Yeah.
blew my mind. So like
Yeah.
if you've got more than a half million on that return,
Right.
then you got to pay a little bit of taxes. Just be happy that you're the kind of person that has to pay those taxes.
Yeah, absolutely.
Yeah, I love that guy.
Um,
Anyway, so let's
one
just
other
do a quick.
small
Oh, go ahead.
Yeah,
Go
one
ahead.
other small thing that people will just often forget because it doesn't it doesn't get delivered in the mail saying important tax document, which is another thing. And unless you're getting things delivered electronically, which even then the email will usually say important tax information, most of the documents you're going to receive will come with a big stamp on the envelope saying, "Hey, don't lose this. This is for your tax return." One of the things that people will forget is that you can get a credit for child independent care. You know, you're paying a daycare facility or
Oh
something like
yeah,
that. And sometimes the facilities don't provide it, or they don't provide all people will just forget. So that's one that we'll very often have to ask about, because we know that the kids were in daycare just from the history of the client, but it's really easy to forget about.
yeah, makes sense. So in recap, life events your CPA needs to be aware of. Um, Married or divorced. Is that one or two? Married or
Yeah.
married
Yeah.
or divorced. Uh, new kids. Baby being born, additional kids being born. They need to know how many kids you have. Sale of a house or purchase of a
Hmm.
house, right? Um, and then I would imagine you may have mentioned it. If you did, I apologize. I don't remember if you did. I would imagine some major windfall of any kind, an inheritance, um, an investment does really
Yeah.
well. I remember one year I had those. Remember that 3D printing stock that I had that was going through the roof. And I
Yeah.
was like, look at this. And you're like, I was like, I'm going to sell it. You're like, don't sell
Don't
it
sell.
yet. Don't sell it.
Yeah, wait, please wait.
You
Um,
saved me. Like that would have wiped out like any deductions
all
that I had.
right. Yeah,
So yeah, stuff like that.
and that's one of the reasons why we should be talking throughout the year for for most people.
Yeah, because that was
So
my
anyone,
last quarter. That was my last quarter
right,
meeting with you that
right,
came
yeah,
up,
you were
and I was
going
like,
to
I'm going to sell it. You're like, wait till the first of the year. Wait
no,
till the
yeah,
first of the
please,
year.
please delay. Yeah.
Yeah.
Um, for windfalls, usually the person who inherits the money isn't going the way that most inheritance, or even if you're getting a major gift, you as the recipient don't typically have a
Yeah.
taxable burden from that. It's
It's already been
one,
handled usually in the
it's
estate.
it's it's been handled by the time you get it, and even the estate usually doesn't have any real income tax from it. The one thing that can happen with an inheritance is, let's say you've had the estate's been open for a while, and it was a huge investment portfolio, and it took, mom or dad had $1 million investment portfolio, and the estate took a year to wind down. The estate will, if there's income being generated by the estate, just like dividends and interest, the estate is then going to issue you a K1 typically that you would then need to report. But that's on the income from the estate, not your, for lack of a better term, your distribution or your cut of the estate. That's from income the estate was actively still generating.
Generating. Right.
So windfalls we want to know about. We talked about childcare, kind of on the same thing as childcare. People's kids will go to college, and because they're teenagers and teenagers don't know a whole lot of anything that's going on financially, the 1098-T forms, the tuition forms, get sent to the kid usually,
Mm.
not directly to the parent. So a lot of times the kids got these forms and just didn't read their email. So then so if your kid's going to college, please tell
You
us
need to
that
ask your kid for those forms and tell your
for those
CPA.
forms. If you got student loan interest, just in the same vein, but usually that's going to be delivered to you. So just again, just think about what happened during the year. Did I work? Did I have a rental? Do I have a business? Just think about the kind of core things you have financially. And if you aren't sure if we need it, just ask,
Yeah.
and then we can tell you, one, if it's required, and two, if it's even going to be worthwhile. Similar to the video we did on itemizing deductions, it might be that you're either not itemizing, or you don't have nearly enough medical expenses to bother tallying up all the $20-$30 charges you had.
Yeah.
But it's a limited view, but at its core, the tax return is a snapshot of what you have going on financially. So just think about the financial components of your life and cross-reference it between the last year's tax returns and the tax documents you've received.
Yeah. I really, I mean, I know that we were like, yeah, this could be a really, long discussion, but ultimately, like, I feel like you've really simplified it to where
Well,
it's like, hey, these are the basics. And then if you have any of these life changes, just let us know. We'll tell you what documents you need. You
right,
know?
exactly. Because we could, if we wanted to, this video could be 2 hours long where we pull up every form that the IRS has, and here's the format, and here's the corresponding place you would put it. Like we can get obscenely granular, but no, just keep it simple. Look at and look at the history and just think about what did you spend money on? What did you get money from this
Yep.
year? And that will get you very, very close.
Yeah. Yeah. Well, and I mean, ultimately, like the communication is the key. The
Yeah.
communication is the key. What we've found is that most people don't have like it's really odd because like I was just talking to one of my partners. You know this. I'm not going to go into who it was, but I was talking to one of my partners a couple of weeks ago, and she was talking about how she kind of felt like her accountant was like trying to scare her and put her under his thumb, right?
Yeah.
And it's just like tactics like that. That's garbage, you know.
hmm
Like a lot of it is like a lot of CPAs, a lot of accountants we found they just don't want to be talking with their clients,
hmm
and a lot of the clients feel like, well, this is numbers, this is math. Many of us have flashbacks to, you know,
Sure.
Mrs. Smith's math class. You know what I mean? Like we're like we don't, I'm afraid of math. I don't, and it creates this you know friction between a lot of accountants and a lot of their clients to where the client is like afraid to ask or afraid to give updates and
Well,
afraid to
they'll,
communicate,
they get
you know.
fussed at. They get
Yeah.
yelled at for
Yeah.
whatever they were doing. And again, that's just a shame because we should be advisors. And it's also, I mean, there's a couple issues with that. One, the accountant's taking no responsibility for trying to advise the clients or ensure the accuracy, because that's one of the things I think some people will get really freaked out and want this like crazy exhaustive list because the accountant won't ask them any questions. Because for us, one of the most basic things we do is we look at especially a 2 year comparison, the previous year versus the current year, but also look at the history and say, okay, are there any glaring differences and omissions from what we got before? Did they give us a brokerage account from this investment firm and didn't? Did they have this form? Did they have this? Did they donate to their IRA last year and they didn't this year? Did they contribute to an HSA? Looking at what the client normally did and then just making sure that it's there. And
Right.
obviously it's easier for us the more the client gives up front, but it's kind of our part of our job to uh, do a sanity check and try and make sure we're not missing anything. But I think some accountants can be curmudgeonly
Yeah.
and just they seem irritated with human interaction of any kind, and so
Right.
the client will just sort of avoid them, which is
Yeah. And
kind of a
they avoid the
bizarre
client.
relationship for them to have.
Yeah. Yeah, they avoid the client avoids them. It's
hmm
it's just not healthy, right? It's just not
right.
how most I can't think of any other business relationship that works that way. You
Right.
know, it's just not how they
Yeah.
typically work. What I love is that, I mean, if you we get into business because we want to make more money for our time at its core,
hmm
right? Why do we want more money for our time? We want freedom, right? I think I
hmm
truly believe that's at its core. The
oh
thing
yeah,
is
yeah.
like if you want that, right? If you want more money for your time, then your objectives and the things you start doing is growing your business, right?
hmm
Here's my point. Um, businesses that are growing, 7-figure companies, 8-figure companies, they have quarterly financial meetings,
Right.
right?
Yeah.
They like companies that are doing 7 and 8 figures, a lot of times they're keeping, they're like not usually seven, but in 8-figure companies, like you have people who are keeping the books up to date daily, right?
Yeah,
That
you
it's
have
that important.
in-house.
Yeah,
Yeah.
you've got in-house bookkeepers, even a lot of times in that case a fractional CFO, right?
hmm
You got somebody in-house that's monitoring this, and you as the owner are meeting with them typically at least monthly, right? And then on top of that, another quarterly meeting, right? So
Yeah.
even if you're at 6 figures, 7 figures, right? If you're not having a quarterly financial meeting to keep up to date on these things, to open up dialogue and discussion, then this is why people get themselves into trouble financially.
Well, and it's not a lot of time either, because we can't promise like how much we'll save you, because there's just one, you can't
A lot of
guarantee it, and
variables.
also
Right.
there can be issues with that. But we have very good success, especially when we're bringing on the client the first year, finding things that were done incorrectly previously. And it's not unusual for us at all to find that, okay, well, we can save you $10,000, $20,000, sometimes more. But okay, we meet once a quarter for an hour or two, and because we're planning and working together through different tweaks, we're saving you. Let's just say even 10. Let's go on the lower end of that, the $10,000.
Mm-hmm.
Okay, you had to commit 4 to 8 hours of your year to do that. So even if you are like an Uber entrepreneur and you're very successful, it's not like you have to run the calculations. It's not like
Right.
it's just us talking and checking in and then making those tweaks. And even on a per hour basis, if you're looking at as your time, it's still a very profitable, productive use of that time.
100%. I mean, I look at those meetings, and there's a couple things with financials that people just don't do, like, and I think I've told you this, like I go through this exercise myself quarterly, where I track my time each quarter and how I spend it.
hmm
I literally, it annoys my wife like crazy, but for 1 week each quarter, I have an alarm that goes off on my phone every 30 minutes, and I document what I did the previous 30 minutes, because I want to look to see how I'm spending my time. Is it
Yeah.
high value? Is that
And
obsessive?
most
Yeah.
people don't want that level of
No.
accountability. I've tried to get so many people to do that, and most
They're like,
people,
we're not
I
doing
think
that.
they know that they've got wasted time, and I don't think some
Nobody
people
does
want
that.
that
No,
on paper. Yeah.
people don't do that. But my point is that when I do that and I put things into a bucket, right? I put them into a bucket of like, this is $100 an hour activity. This is $1,000 an hour activity. The thing is that's crazy is over the years of doing this, I've isolated things that are $10,000 an hour activities, even
Yeah.
$100,000 an hour activities. And I can tell you that things that we're talking about, like a financial meeting, like a quarterly meeting with your CPA to review tax moves, that is 1,000 an hour to 10,000 an hour activity. Another financial thing that's like that is, if in that quarterly meeting or outside of that or before it, you're looking at expenses that can be cut, right? You
hmm
can, like, you've seen me work with somebody and do it, where
Oh
we're
yeah.
looking at an acquisition, we just acquired the company, we're like, okay, we're going to cut some expenses, we got to make it more profitable. You remember that one that what was it, I spent 2 hours with them, and I want to say we cut like $160,000 in those 2 hours.
Oh yeah, I mean it's
It's
bonkers,
crazy.
the stuff that can be there, and we'll see that, and we've been on another call we were on, someone where we realized within about 10 minutes, we back of the envelope calculation, the way
Yes.
they were structured and still refusing to fix was costing them. It was somewhere around, it was a little over 6 figures in
Yeah.
tax from one thing
What?
that
Yeah.
we could change.
Yeah.
It was.
And they were like afraid because of the potential but it was like, but you're losing six figures a year by
Six
not
figures.
doing this. Like that's
And some
crazy.
people, it's amazing how comfortable they'll get with just how they're set up, or like you're saying, the fear of that causing something else. Sometimes people are comfortable paying that.
Crazy.
For, but anyway,
It,
yeah.
no,
Point
it's
being, yeah,
crazy.
there's a whole lot of value in absolute dollar terms, and a return on the value of your time. So
Yeah.
it's
High.
well worth a couple hours a quarter.
Yeah. High value activity, $1 million a year type activities, that they get results. So, well, as always, Mike, I appreciate the simplified
Oh
breakdown
yeah.
of how to do this, because I think that this was perfect. And I got us off on a tangent because I'm like, why don't people have quarterly meetings with their CPA? It just doesn't make sense. But
Yeah.
no, very much appreciate it. This gives you an understanding of what documents baseline you need to come to the table with, and what life changes you need to alert your CPA to. And then ideally, just in recap, whoever you're working with, whether it be Micah, which they're going to offer this and try to keep you accountable to doing it, but whoever you're working with, like, you should be able to have a quarterly meeting with that individual, and it's well worth the time, energy, effort, money spent on that. So hopefully that helps. And as always, if you have any questions, make sure that you put those in the comments below. Of course, we have the calendar link as well in the description, that you can connect with us, get some questions answered. And we always love to help folks and get their questions answered about taxes. Micah, do you have anything to add before we wrap it up today?
No, I think that's
Awesome.
it.
Awesome. Well, thanks everybody. We look forward to seeing you on next week's episode.